All right, good morning and hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 27th, and welcome to this FOMC Wednesday. Eileen, good morning to you as well. Permendra, Minho, Hussein, Kyle, Pete, good to see you guys in the room today. So, you have the FOMC on tap later this afternoon. We're not expecting them to actually change policy, but we'll be seeing if there'll be any alterations to the policy statement, and that's what we really have to look at on these interest rate decisions where we don't get the quarterly projection. It's really all about the policy statement and if there's any alteration there. So that hits the tape at 2 o'clock. Make sure that you're aware of that for the dollar crosses. We'll take a look at some of the dollar crosses today. Haven't really been too crazy about them. Aussie dollar still in focus. Euro is sort of a drifter. Dollar yen still holding that same range we talked about yesterday. We'll take a quick peek at that. Sterling is off the table for me. And then we'll jump into some of the crosses. Euro Aussie was highlighted last night as well. So before we get started, here's what the relative performance so far on the session looks like for the dollar. So you see that it's weaker against all its major counterparts. The biggest performer so far, Aussie dollar, up 0.73%. This was yesterday's highlighted scalp. Still favor the top side. It's been getting kind of tired just riding a trend line higher. We'll look at it. But the broader focus still remains weighted to the upside. Biggest snoozer of the session is the yen, with virtually no change from yesterday's close. So again, the yen continues to be something that's not really been too fruitful as far as the dollar yen is concerned, still holding that range. As far as broader equity markets look like, you had a little bit of a spill in risk. Okay, after yesterday's rally, obviously we saw a 282-point rally in the Dow yesterday. S&P was up by 26 points. It was actually the laggard, but a nice move nonetheless. Here's what we look like so far, or here's how we closed out Asia. Really a mixed performance. You saw a nice little rebound in Nikkei 225. Shanghai still rather weak, not by much. Europe still weaker across the board. Again, not by much. Biggest loser is the FTSE MIB, actually down 1.6, but DAX, FTSE 100, CAC, all about 0.2 to 0.3% lower on the session. So where does that put us on the dollar? Here's what we were looking at yesterday on the radar charts for the greenback. You know, very loosely, you never want to really stress these formations too much until you start to get some sort of reaction off the levels, but sort of gives us guidance on where we want to be looking. We noted a short bias sub 12,254. Next target down is 12,219. And big support, 12,200 and 12,204. That's a basic 38.2, the advance. It's also that former high day close and trendline support all coincide there. So the trade has made it to that 12,219 target. We just hit that minutes ahead of the webinar here. You might see a little bit of a recovery here. Okay, we're going to go ahead and leave our bearish invalidation level up at 1254. Still looking for a move lower towards that 1200 barrier. We'll see if we can't get a pop higher to get back on the short side there. But long story short, you stay bearish on this pair, or stay bearish on the index rather, while within the confines of this formation here. So it kind of jives well with what we've been seeing in overnight trade, with what we've been seeing in the Aussie specifically. Again, yen's been sort of a snoozer, so is the sterling, but the Aussie, Euro, both some really nice moves here as far as dollar-based movements are concerned. Aline says, question on the trigger on a 5-minute or a 1-minute. If the pair is in the middle of a session range, but the stop can still be placed and there is a RSI trigger, is that something you'd consider? Such Aussie dollar and Aussie yen as of 7 a.m. Eastern this morning. Sure. I don't want to necessarily. So let me just take a step back, Eileen. When we talk about times that we want to trade, how we want to trade the opening range of the session, or we want to wait towards the early part of the hour or the late part of the hour, these are all guidance, right? By no means is it a necessity. So I won't throw away a trade just because it's not the time I want to be trading. If the signal is there and I have a probable stop and a conviction stop limit, then sure. Take every trade on its own merits, Eileen. But we'll look at the Aussie dollar. Let's just look at that right now, as we're talking about it. Here's what the Aussie looked like on yesterday's report. We'll come back and take a look at Euro Aussie and gold for sure. Really made a nice rally yesterday. But Aussie dollar. So here's what Aussie looks like on the daily chart. The price action was showing middle of the trading session ranges. Okay, let me take a look here. So here's the Aussie dollar. Remember, 70.37 is sort of the level that we were talking about in yesterday's piece. I also wrote a piece on this on Daily FX as well. Big region, okay? Not only is it the former 100% extension from the highs there, but it's also the swing close lows that you made in November, the former highs that you made so far this month, and on the near-term chart, oh, looks like my charts are frozen. There we go. On near term, there's that 70.30, 70.37 level. So I don't blame you if none of you took any positions on this last night. I certainly didn't. There were a lot of triggers, which we'll look at in a moment, but the trade has just been unable to find much progress above that median line. One thing that has been helping us is that the slope certainly seems to be in play, right? I don't think anyone's going to argue that at this point. I'm kind of cautious on long exposure from here, Eileen, especially Aussie yen. Okay, we'll jump into Aussie yen in a moment. We'll definitely take a look. But looking for Aussie dollar, still favoring the top side. We're going to go ahead and raise that bullish invalidation level from 69.55 where we had it yesterday. Go ahead and lift that to 69.90, 69.89. Basically the swing low that we made yesterday and trade right ahead of that blast off in Asia. Some stronger than expected CPI numbers did help fuel this rally. Take a quick look at what that looked like yesterday. So we were expecting to see a print of 0.3, a drop off on the quarter and quarter from 0.5, came in stronger, same on the year on year. So he's had some lackluster trimmed and mean weighted CPIs, but the main headline figures both topped estimates. So some of those expectations for weaker or lower rates from the RBA starting to get curbed a little bit. Here's what the Credit Suisse overnight swaps look like. So for the Aussie, at this point, we've seen a huge reduction in the probability that we'll see a cut to the main interest rate, right? You're seeing only a 6% chance now that we'll see a 25 basis point 12-month expectations. This is still lower. We were at 38, negative 38, negative 37 basis points yesterday. We're now at negative 31. So you're seeing those expectations that the RBA will have to ease start to get pushed out a little bit. And that should be rather helpful here for the Aussie. Next topside target, soft target at 70.75. Beyond that, 71.05 is 50% of the decline. And I just wanted to highlight this because I talked about this briefly yesterday in the webinar, but you know, the median line parallel, the upper median line parallel does come in right ahead of both of these targets. But if this is a simple correction, we really should see that 71.36 hit, and that would be a little bit more of a critical resistance range. If this is going to turn over, this is sort of where we would want to see that rally max out. As it stands right now, still remaining constructive above 68.90, looking to buy pullbacks targeting 70.75, and more first, initially, that 71 handle. Any questions on the Aussie? And again, you know, real back and forth price action overnight trade. Here's what the scalp looked like as far as your near-term triggers. You had a lot of long triggers that gave out. This was probably the best one. If you had a tight stop on that, you still would have held it very nicely. You would have gotten that 25 pip run just on the release of the CPI numbers. But subsequent, there still were some topside triggers that gave out, but it's been very tight on the upstretch. So just use some caution here. I'd rather see a much more substantial pullback to get a better entry. Or if it rallies, maybe even offer a short exposure off this region here, back towards 75. A lot of different ways we can play it from here, but I'll just be cautious about jumping on long exposure at the weekly high. All right, so Eileen, I hope that helps as far as what I was looking at as far as the 5 minutes were concerned on the Aussie. So for Aussie yen, which is another trade we were following, let's take a quick look at the latest trades on that. Here's what Aussie yen looked like a few days ago, and here's what Aussie yen looks like now. So, as we noted, we were looking for, but we would be looking for long triggers heading into 81.19, 81.35 confluence support zone. We didn't quite get into that, and I think we were talking about that here in the webinar yesterday. We just missed that before we turned around, reversed. You got a trigger break to the upside, took you right back above that trendline resistance off the highs. All this thing has done is simply set a weekly opening range below resistance. And again, these are my favorite setups because the break gives you all the more conviction. You set a high early in the week, you tested a low, we came back and struggled at the high. If we pop through, which it looks like we're doing now, you look to buy pullbacks targeting 83.95, and the 2015 high day close comes in at 84.72. So let me see the 5-minute chart here, what you were looking at, Eileen, and see if there's anything that we missed here. Had the appropriate stop area, said Eileen. The price action was showing trading, middle trading sessions, especially Aussie yen, around 7 a.m. Yeah, I see what you're talking about. I think it'd be even more apparent on the daily chart or on the 1-minute chart, but there was a trigger there I'd be looking at. Yeah, you would have worked with this trigger or this trigger. Both of them I would have worked with because, and I'll tell you why in a moment. Yeah, because a couple different things. So Eileen, you don't want to trade. Let me take that back. When we want to jump into positions mid-session, we want to make sure that we're still either at one of the extremes, either the session high or the session low. I have to be able to put my stop against one of those positions. Eileen says, and the question is because usually trying to watch the highs and lows for trading session lines. Don't focus on those too much. Remember, guys, these trading session lines are going to continue to move with price. But for the London Open, that constituted a break of that trigger we just looked at. That constituted a break of the London opening range high. Here's your London Open. Here's your London opening range high. You broke the London opening range high. If you can fit a stop within 26 pips to the downside, absolutely. Got nothing against that. Let me show you the Aussie yen here on our charts. And here's the 5-minute again, or this is the 1-minute actually. Does that make sense, Eileen? So you want to use them in combination, okay? So we have the London opening range high. And guys, if you're wondering what Eileen's talking about, she's talking about this indicator here. It's called Trade Sessions. You can download that from fxcmapps.com. All it does is it highlights a marker on the high and low for each trading session. It goes right around the clock. So you have the Sydney, Tokyo, the green is London, and the red is US. So it helps us be able to get a better graphical representation of where the highs and lows are for the session. So absolutely, a trigger break, Eileen, into a break of the opening range high for the session is definitely a trigger I'd be interested in. Also, one thing that I would note, when you see momentum pull back here and find support at 50, that's bullish. That's constructive, right? If it's a really strong uptrend, we should see support for momentum at 50, at 40. We really shouldn't be going lower than that. And that's what you're getting at that point. So there's a couple of triggers I would have worked on that, but I see what you're talking about. It's always going to be in your best interest to try to use the opening ranges to try to trade against the high session high or low. But if the opportunity arises, definitely I'd be comfortable taking that. Hope that helps. Mark says, hey, Mike, I'm late, but good to see you are better. Thank you, sir. It's always good to be back. Good to see you as well. Gary says, after 11 minutes, I've finally managed to log into the webinar. Can I just quickly ask, did anyone else have any problems logging into the webinar today? Guys, do keep us informed. GoToWebinar is a lot more of a stable software than what they use on Daily FX, so I just want to make sure that we're not having any problems. Eileen's saying no problem. Gary, keep me informed if you do have any problems. What was the name of the indicator showing with the different trade sessions, says Alberto? It's called Trade Sessions, right here. Trade Sessions. And you can find that again on fxcmapps.com. Pretty nifty indicator. Pete says no problems. I appreciate that. So Gary, it might be an isolated incident, but please keep me informed, man, if you run into any issues like that again. Craig has a rather lengthy question here, but I'm sure others have the same problem. So let me address it. It says, Mike, I seem to be suffering from premature entry. I would find it extremely useful if you are willing to go through your previous day's trade history as a regular part of your morning briefs, so I could see where triggers were actually good enough for you to take, win, lose, or break even. It would be great for me to understand which triggers you have found worth taking. Great, Craig, I got no problem with that, my man. Showing at least where the triggers have been, where we'll be looking to take those positions. That's what you're here for. So I have no problem doing that. I just won't be able to offer a service, guys, where I tweet out every scalp. It's just not going to be something I'm willing to do or is going to be beneficial for anyone. We've tried to think about services like that. They end up prompting a lot more chasing than anything. You know, I could take a long here and quickly reverse and take a short. By the time I tweet that, it might be already, halfway through the range. So it's just not feasible to make a scalping type of, trade by trade service, which is why we highlight the key levels, we highlight the bias, your invalidation levels, and want to try to help you get as comfortable as you can with the strategy. So Craig, I appreciate that. Alberto says, I got that one. Okay, Gary says, okay, cool. Must be a problem on my end. Keep me informed, Gary. If you do run into any issues, man, I'd be more than happy to look into it if there's something we can do from here. So kind of got off topic a little bit, but Eileen, are we good as far as the various triggers that you would have seen last night or into today? Not only that, the really good triggers also tend to be, I know I hate using triggers that are only 2 points because you don't really have that much conviction, but look for your classic hallmark triggers, guys. Divergence into a trigger break resistance, or divergence into the highs into a trigger break support. So right now you're getting that higher high, higher high, higher high, lower high, lower high, lower high. You don't necessarily have a decent trigger here to work with. Maybe something like this. But this would be an indication if we break below, that you're going to see a little bit of a reset. It's a 1-minute chart. Doesn't necessarily mean we're going to be looking to reverse our bias. Just means near term, yeah, likely to see a little bit more of a drop down if we break this trigger. And specifically that we're getting ongoing divergence, you're going to want to pay attention to that as well. All right, so that's Aussie yen. And again, a quick update on where that trade is. Still unchanged as far as the levels are concerned, guys. We're still right within the confines of this formation. Resistance we're checking right now, 83.57. Next target is 83.95. That's the 1618. It looks like we're going to make a run on that sometime during this session. The 2015 high day close, again, low day close, excuse me, at 84.72. Craig says that would be fantastic if you would share that way. I understand about not tweeting, but the previous day's trades would be very useful. Thanks, Mike. Craig, I'll do my best. Again, I've been kind of light. I've been suffering with some medical problems, but be no problem on my end, guys. Already covered sterling dollar, says Mark. No, I have not. Looking for a short with a stop loss at 45. I haven't really been a fan of the pound. Maybe some of the pound crosses if someone put a gun to my head, but the pound itself, let's take a look. Oh, it's right here. Yeah, I mean, not really my forte or my type of trading strategy. You know that, Mark, as far as trying to just call a high on this or try to call a reversal. Oops. could be sort of what's in play. For me, I have 45.60, 45.90 as a bigger level of resistance for the sterling, just on some Fibonacci basis. But also, let me just zoom this out real quick for you. So just to give you some perspective of where we are in trend, this is sort of the formation that we've been working with on the daily charts. This is still the 30-minute, but just to show you, there hasn't really been too many weekly setups that have offered a lot of back and forth. When I look for a scalp setup, guys, we want something with structure like this. Even this decline was clean and sound structurally. Right here, you're sort of basing. You could see this thing rip right through 145.95, that resistance region, or it still could show us a little bit more back and forth here. The only thing I don't like is that this thing didn't reverse off of anything major that I had as support, either on the daily or the 30-minute. So I'm a little bit more cautious on trying to play the shorts from here. We'll come back to it, Mark, if you'd like, but sort of just the bigger picture I'm looking at. Nothing here pending at the moment. He said, okay, that's what I wanted to see. Awesome, thank you. You're more than welcome, man. I appreciate that. He says, I hate it too, but made some good pips lately. That's a first. If the pips are being made, I'm always going to be a fan. Eileen says, by the way you leave your fibs start lines on your expanded charts sometimes can't seem to match up where you indicate levels. Eileen, give me an example. Any way to leave your fib start lines on your expanded charts? Sometimes I can't seem to match up where you indicate the levels. Give me some background. I'm not sure I'm reading that right, Eileen. The center fib line. You talking about the 50%? Or are you talking about where you start and stop the fib expansions? Oh, okay. So the fib expansions are always going to be set. You can tell where the origin is from just by seeing where the fib starts on the chart. But if there's a specific one that you're unable to pinpoint where the reference points are, just feel free to let me know. I'll be more than happy to break it down for you. No problemo. Okay. So we've gone over briefly the Aussie dollar. Any questions on the Aussie from where we are at this point? Still the trade I've been most active in. I only had a couple of scalps yesterday, but they were all in Aussie dollar. Again, 70.75 near-term soft resistance backed by that trendline support and key 50% retracement at that 71.05 level. We went over the dollar index and Euro Aus looks like this. So Euro Aus was highlighted in the previous day's report. I just want to go over where we are in the daily, and then we'll go into the 30-minute real quick. So if you take a quick look at this, guys, the broader trend is still weighted to the upside. We've been playing under that premise. The trade was for the short side to come in to play this correction near 53, where again, we would start to look for more key support, possible long exposure from there. You had a big region there, right around 53. I think we went over this yesterday, but you have a former median line right there in blue. You have the 618 retracement of the advance. Excuse me, this is off the entire 2016 range so far. You have the swing high from December of last year, if you look to the left there. 50% of the decline off the September high and basic channel support, all right there. So that's been the focus since the start of the week. I've made a small adjustment. I just want to show you this. If you take that chart that I posted last night and you take this same pitchfork, small adjustment to that subsequent high that you made the week starting January 17th versus that 15th high. You can see that that coordinates with the high very well, coordinates with the low very well, and just seems to be describing price action with a little bit more accuracy. So go ahead and adjust your charts just a little bit, tilt it down just a little bit to get that top in, and it keeps everything the same, essentially, as far as the levels are concerned. We're going to reduce our bearish invalidation level. At this point, we'll go ahead and bring that down. Whoops. Go ahead and bring that down to the basic upper median line parallel, the soft pivot in price, which is 55.39, 55.40, with key support still at 53 area, 53.25, really absolutely critical. And an area of which you might actually be interested in some nice long exposure if we do get some long triggers. But that's sort of a major critical area for Euro-Aus moving deeper into the week. Remember, as far as event risk is concerned, you really don't have anything coming out of Europe so far at this point. You'll have to really be focused more so on broader risk. You have the ECB on tap later today. You have the Fed on tap later today. And then more importantly, you get US GDP on Friday. I know none of those dollar data would be very impactful for Euro-Aus, but more so for Aussie risk than anything. So keep an eye on those two event risks. Other than that, you're really limited as far as event risk from Europe or Australia heading into the close of the week. So still could see a rip back towards 55.39. I'd still be looking for that move back towards 53. Really nice major area of support. Any questions on Euro-Aus? And the only thing I was looking at this before the webinar is this. So the London opening range, very, very tight. In fact, most of the ranges overnight were very tight. But if you look at London in green and the US here just starting in red, really nice tight opening range. So a downside break below like 54.20, 54.15. The stop against 54.70. You're looking for a drop all the way into 53. Quarter daily TR is 70 pips on this. So do keep it in mind. If you're newer to the strategy, it might not be your best candidate for your first scalps or so. But if you have been doing this for a while, we live for these beautiful pairs, specifically when you get the final break or the trigger, you got a healthy range to work with there. All right, and next on tap, I just wanted to touch base real quick, guys, on gold. We talked about this briefly yesterday in the webinar as well. We're coming into that initial major area of resistance. We actually did close above it, so technically speaking, you still could see that spike into the upper median line parallel. For me, I'm not holding any exposure. If you're looking for new exposure, I would not be looking for the long side from here. The risk is for a little bit of a pullback. You stay constructive above 1096, which was the low day close for July. Decent pivot in price and currently coincides with the lower median line parallel. This thing is loaded with resistance targets to the upside. So just want to highlight your upper median line parallel. That comes somewhere around 1126. If you look to the left, 1126 ends up being a decent swing high from August. Okay. You have the 200-day moving average, which comes in at 1132. Not a major pivot in price, but certainly has caught some highs. And last but not least, the key 618 retracement of the decline that takes into 1135. Okay, so constructive above 1096. Those are your topside targets. You're right slap in the middle of that range. So what do? Nothing from here. You either look for the pullback to get long against that low, or if it does break, we don't want to encourage chasing, but you would be looking for a reaction off of one of these levels. Now, in combination with what we're seeing in the dollar, right? If we take a quick look at the dollar index on the daily, we looked at it. Well, I guess we should bring up the 30-minute. It was better. That is just coming into some support at that 12,219. So you can envision a scenario where you see a little bit of a rebound here in the dollar index. Gold pulls off this resistance level a little bit. Sorry, keep shuffling through. Gold pulls off this a little bit. Then you see that final stretch take us into the upper median line parallel. Same thing for dollar. Maybe a little bit of a bump up higher off that support. Then you see that final drop down into median line support. Any questions on gold? Bernard, if you have time for, sure do. Throw out any questions or trade setups you want to review, guys. Feel free to throw them on the message board. Bernard wants to take a look at the S&P. We'll definitely do that. Eileen says, also, when you get a chance, can you go over a setup or two for the FOMC presser, as well as triggers, and generally what to watch for triggers during the data releases? Thanks. Sure, Eileen. Remember, this is not going to get a press conference today, okay? It's just going to be the release of the FOMC policy statement. So at 2 o'clock, you can see the wires light up red with all those comments coming out of the Fed. You're looking for any alterations to inflation is sort of the big thing I'm looking for, whether they say that inflation is picking up or is lagging. That's sort of the one thing that you've seen the Fed really hold steadfast. If we're talking about the dual mandate, well, according to them, employment is essentially at the natural, quote unquote, running rate of employment. So that leaves really the burden all on the inflation outlook. So that's really what the focus will be, Eileen. I don't really think we'll get much. I mean, if anything, they might try to soften the tone a little bit. You've heard some central bank officials come out and start to say that, maybe that 4 hike schedule for 2016, maybe it's a little ambitious. And all of these are just going to continue to shift interest rate expectations back and forth. For us, we're just going to concentrate on what price action is saying. So for me, Eileen, if you want to talk about the FOMC, you already know what I'm looking at. And that's going to be the Aussie setup that we've been working with. All the dollar crosses come into focus when we come into event risk like this, but the Aussie will certainly be a pair I'd be interested in looking at, depending on how this plays out. If the dollar rallies, it'd be a beautiful play if we see a spike into the upper median line parallel, then they come out with a little bit more of a hawkish tone or something, and you see the dollar take back some of those losses. So that would be a nice pullback back towards that 70 handle again, or 70.37 might be a play. We really have to see where the market's positioned right ahead of the release. I'll tweet something out, guys, if I'm looking to take something, or if I'm looking at a specific setup right ahead of the release. Tim says, if one can get that trading session indicator for MT4, or I usually use TradingView Pro. I'm pretty sure it's not available MT4 on TradingView, Tim. I think you can get it. I'd have to look into it, man. I haven't really checked out if it was on TradingView, but TradingView is relatively easy to code, so you could probably actually write the code yourself. Can you please talk a lot about a lot size calculator? Alberto, I saw that. Was that you who tweeted it yesterday? I'm not sure what your need with far as a lot size calculator. Are you looking to determine how many lots you should be trading, or are you looking for what the margin is on the lots? I'm not sure what you mean by the lot calculator. During heavy market news, would you focus on one pair price action or several? So Tim, for sure, I like to have a couple of setups always. I never put all my eggs in one basket, but during those event risks, I won't necessarily be trading multiple pairs. I'll have a couple of setups in mind that I want to take a look at and operate on during that release. And then based on whatever the data comes out, I'll jump into one of those. I won't necessarily try to avoid event risk trading more than one pair, guys. It becomes very tricky. Is that an Aussie dollar short trigger? Let's check it out. Where's the 5-minute? Oops. So from the lows, yeah, you can interpret this to be a short trigger right here. But we're not at one of our levels. So remember, guys, Tim, or who was asking that? Eileen. So I'd rather be trading against one of our levels that we've mapped out, 70.75, more importantly, that median line. If I get a trigger like that while price is up against resistance, sure. Actually, got me looking at this now, Eileen. We're seeing some divergence. Price action's higher high, higher high, higher high, lower high, lower high, lower high. And remember, the closer these divergent signals are to the median, to 50, the stronger the signal becomes. So I actually do like that short trigger. I actually do like it a lot. Let's see what it looks like again. Yeah, you could probably squeeze out a trade right on that, Eileen, to be honest with you. But the only thing I'm going to say is this. Remember, we're looking for the rally still, right? Since the start of the week, we've been constructive. So I have no problem taking counter trend trades. You have to recognize when they're counter trend, though. So if you were to jump into a piece like this, the stop would be against the high, and you trade half leverage what you typically would trade. Whereas on the way up, we were trading full leverage. You're looking for about 26 pips. The stop does work. It's going to be a nice tight stop. But I wouldn't be looking for anything more than just a drop into like 70.35. So then you start to look at what your risk to reward is and if it's worth it to take that position. For me, I still like that. I still think you can get that stretch right into the resistance region here before this turns over. I do like the ongoing momentum divergence. A break below this, you're certainly looking for a move back below 70.37 in my opinion. But off this region, yeah, you're likely to get some kickback. I did like that trigger. Does that help, Eileen? I see it for Aussie. Thanks for the extra details, more than welcome. If I want to risk 5% of my account per trade, how do I calculate the size of my position? At some point, I saw a calculator where it would enter the account size, percent of risk, and pair traded, then it would get the size of the position. Oh, Alberto, you know what? I really don't know any at the top of my head. I'll ask some of the guys on the desk here and see if there's anything that they use. But on the desk, we all use good old-fashioned pen and paper. Maybe a graphing calculator or two. Okay. Graham, dollar cat, sure can. Dollar CAD, the decline that we talked about early in the week just fell short of the initial or the major downside target. Remember we talked about this earlier last week after we hit that 46.58 level. The reversal first target was 42.50. Second is right here, 39.80 into essentially 39.90. Okay, 39.91. This is the 2004 high. The 38.2 retracement of the advance. This is off the advance off the low from October, and a 1618 extension from the decline. All right here. More critical support is down here. We talked about that as well. But right now, I'm still looking for a drop towards that 139.79, 139, basically the 140 handle, this region right here. Here's what it looks like on the intraday chart. Okay, so at this point, we can go ahead and drop this down. So on its face value, again, if we're taking it just based on what price action's been saying since the start of the week, guys, here's the start of the week. You sit on support, you make a run into a new high, you test the lows, you break right through. On the rebound, we test those lows, it holds as resistance. So to me, this looks like a basic opening range break to the downside. It's just that key support at 140 has still not given out. We still haven't achieved it. We turned ahead of it. So if you're asking me, as far as this is concerned, who was asking about dollar CAD? Graham? I do like the correction, man. I just think you want to be really picky about where you want to get in and out on this one. I'd be much more comfortable if we get back towards 42.50, basically the high that we made yesterday, try to press a short. Or even if actually this breaks into 37.50, I think this would be a nice long opportunity. But as it stands right now, you're not quite at support, you're not quite at resistance. It's one of those pairs where you kind of need to get some clearing out. Don't forget, we do get also on Friday not only the US GDP numbers, but we also get the Canadian GDP numbers for November, expecting a nice clip of 0.3%. They've been printing flat reads on GDP for the last couple of months. So certainly we'll be taking a look at that. Thank you is also looking at a long trigger on 5 minutes for dollar CAD. Let's take a look. So this long trigger has given out already. I wouldn't want to try to chase this one. This was actually a beautiful long trigger because it's the hallmark. Our favorite triggers, and I say this all the time, is always going to be divergence into a trigger break. And this was a classical example of price action making a lower low. Remember, you're only looking at the close price, the oscillator making a higher low, followed by a 3-point trigger break. Those are always going to be beautiful positions. I just wouldn't get too excited as far as the long side is concerned. For a scalp, yeah, if you take a quick retracement off the highs here, just a basic 38.2 ticks into 41.50. You've already completed 236. A basic 38.2 takes into the high that we already made, and that's like 41.50. You said the message was sent at 40:51. Oh, quick pullback, too late now. Sorry, Graham. I try to get to the questions as fast as I can, my man. But guys, you don't need my approval. If you see it, you know how we are jumping into these positions. Do feel free. I mean, that was a good entry. But you guys are getting the picture. I'm feeling a lot more comfortable with it. Graham, does that help? Let me know if you have any other questions on that specifically. Okay, we went over gold. So those are the setups. He says, yes, helps build confidence. Cheers to that, Graham. Most important thing, man, is that we do have confidence in our positions. So Aussie, gold, dollar we covered. Euro, Aussie we covered. Dollar index we covered. Aussie yen, levels unchanged, clean, weekly opening rate. Oh, we covered Aussie yen earlier in the session here as well. Let me just take a quick look back at what that's doing. Yep, so again, clean weekly opening range. We're looking for just a basic break here, favoring a topside break, but nonetheless, check that 83.57 as we open up US trade. Euro pound, again at key support, 75.42 is what I wrote last night. Let's see where Euro pound's trading now. I would expect to see a nice rebound off that level. It was a big support last night. Oh, nice. Okay, so this is the level I was talking about. 75.42, 75.50, huge confluence region of not only some fib levels, but just a major inflection point in price. And that's something that you want to see that adds further conviction of it just being a basic fib level. So it's the weekly opening range low. It's the 2618 extension, 100% extension, nice confluence region. And support was at 30 last night. So we did see a nice rebound off that. Again, I think the broader trade here is still higher. And I would have loved to have that entry there. Shoulda, woulda, coulda. Look, near-term resistance at 76.16. Yeah, levels are unchanged. To break beyond that, 76.66. Give me that key 618, and then the upper median line parallel. So I still like this higher above 75.50. Near-term resistance, 76.16. Yeah, I already said that. Okay, cool. And that's Euro pound. All right, guys, that's everything I wanted to cover on my end. Let me jump into your questions. Dollar yen, absolutely, Gary. Also, I want to get for, where is Bernard? Are you here, Bernard? You were asking about, was it the SPX? Yes, Bernard, there you are, SPX, gotcha. So here's, real quick, we're going to segue, and then we'll jump into dollar yen. Here's what the SPOOS looks like on the daily chart. So remember, we were talking about this. I don't know if it was Craig who had sent an email earlier in the week that he was short on this pair, or short the SPX, and he was worried about it. So as we said, it's exactly what's panning out. We're expecting some real back and forth action here after a hangover effect of a move that big, coming into a major support and reversing. Wouldn't be too surprised to see this consolidate some more. Again, like I said yesterday, nothing's changed. I still think you can get that pop into 1927. That would sort of be the first area I would look for possible reshort entry or an invalidation level. So if it breaks through that, you know, you can see a rally towards the upper median line parallel, and that can go as high as like 1990 again. So that's not the base case scenario. Base case scenario, you'll probably see another pop towards 1927, and then it turns around. But long story short, you know, we're in this formation until we're not. As long as you stay below the median line, we'll continue favoring the downside. It's just that near term, off that stretch there, yeah, I do think the risk is for a pop higher before it resumes. Keep in mind, this is just a sliding parallel of the same slope for that operative structure off the highs from November and January. And you still have a lot of room and momentum too. So you can envision a scenario where we pop through 40 here, make it into just basic trigger resistance, price makes it into there, and then we see a downside trigger from there or something like that. But I wouldn't get too aggressive on the short side from here. From a scalping standpoint, you know, I don't really trade this intraday, guys. I'm just giving you the daily overview here for what we're looking at with the SPX. Bernard, does that help? Is there a specific question you had on this pair? As a daily routine, would you scan all charts or just a few ones you follow? So Manho, I do have a very strict regimen, a routine of how I follow the markets. Sunday is the day where I will look at every single pair. So Sunday, I will come through and open up every single one of these 30-minute charts. I'll place the marker for the chart for the weekly open, and I'll kind of gauge both on the daily and the 30-minute where we are in trend. Okay, where we are in trend. Once we've sort of ascertained that, then throughout the course of the day, I have a little notebook. Any trades that I put, any trades that I'm watching or I'm tracking or I'm working in, I always just write notes about that. Next day when I come in, I go right to those previous trades that I was in or previous pairs I was following, see what we're looking at, see if there's been any improvement, what the formations of looking at, and like that. If you try to follow all the markets, you're going to get burnt out, Manho. You're never going to be able to follow all of them at once. Even me and Jamie do this for 10 years. We still can't. We still can't cover every single market. So you want to make sure that you're kind of getting a broader feel for what the market is doing as a whole, but then really specifically narrow down your focus into one or two pairs that you're interested in trading. Bernard says, thank you, I'm long. Oh, Bernard, about the SPX? Yeah, I mean, we're on the same page then, Bernard. I'd say just watch that sliding parallel, but broadly speaking, I would like to see a pop back towards that 1927 level. Again, just my humble opinion. And today's FOMC day, so if it's going to happen, it might be the day. It might be the day to make it happen. Craig says, would you show us the triggers you took since yesterday again? So unfortunately on MarketScope, after the day closed at 6, it doesn't keep your trade history on the charts. I showed you the triggers I was working with last night. So those are sort of the triggers I was looking for to initiate the long exposure. But all the arrows from the previous day's sessions are out. This is what would have been playing well overnight. I didn't take these trades, by the way, Craig, just as a disclaimer, man. This is where you would have wanted to jump into a long here. This was early into the open of London trade. This was a beautiful trade. It's middle of the night here in the US. And here's another one about halfway into London trade. This one would have been a very well received trigger. Why? Because you're essentially at the open range low for the market for London trade. So you're basically at the London low or just off, and you're getting a trigger off that level. So you have a clear-cut conviction of where you're pushing your stop against. Very tight trading range. So on a Euro Aussie move, you'd be a lot more, I think, a lot more well suited to play that strength. And again, for this, you already know what I'm looking for heading to the US Open. Excuse me. Either it breaks up 54 or a break above 54.80. Nice. London range. The entire London range is still intact. Mino says, okay, sounds good. Practice. Need to write down thoughts as a matter of discipline. Thanks. Yeah, I definitely always recommend you have a little notebook just to kind of be able to gauge and follow your thought process of why you're getting in and out of these positions, for sure. And when you recognize something that you didn't do, or if you recognize something that you did that you shouldn't have done, when I was first starting, I had a book of Post-it notes. And every time I did something stupid or I did something that I recognized, I would put a Post-it note, I'd stick it right on the wall in front of me. Well, by the end of the first month or two on the trade desk, my wall was covered with Post-it notes. But it tends to drive the signal home and really helps you try to avoid some behaviors that might not be in your best interest. Just to share, for tracking pairs, I follow Euro dollar and dollar CAD. Whatever and whatever you highlight as intraday pairs of interest on SB. I reckon the subscription is worth that alone. Keep it up. Cheers, Graham. I appreciate that so much, man. And we'll try to do our best to keep you on the right side of the market as always. Eileen says, do you keep a multi-chart screen up on one of your 4 monitors? Yes. So these are the 2 platforms I'll work with. This one has all the majors, 30-minute and daily. Then I have another platform here, which has the equity indices and some of the extraneous longer weekly charts. But yeah, I'll typically drop this down to sort of a 4-way if my charts respond. And I'll have, 2 screens just monitoring the 30-minute charts that I'm following. And then I'll have my personal, the live trading account here with the 5-minute, a couple of different pairs here that I'm just sort of gauging on a 5-minute or a 1-minute basis that want to draw my attention really quickly if we're going to be jumping into a position. But Eileen, try not to over immerse yourself with too many charts and too many, because it's going to, it can have some bad implications. Would you trade on MarketScope or other platforms? So I've traded on a whole lot of platforms, but no, I've traded with Saxo. I've traded with Deutsche Bank is actually my favorite trading platform. But personally, for my accounts, I trade through FXCM. Are you using one PC or multiple virtual machines? Mark is saying this is just one PC. It's sort of a super PC, Mark. I built it from scratch though, so I have way overkill on the RAM, overkill on a flash drive for the hard drive. Makes a big difference. Do you hedge your positions? KZ, I hope I'm pronouncing your name right. Welcome aboard. Good to see you. Do I hedge my positions? Very, very careful way I want to answer that question. K, if you don't mind, I'll just call you K. I hedge a position in a very different way than you typically think of hedging, okay? 99%, I can tell you this from personal experience from sitting on the trade desk, guys. 99% of retail traders who say they're quote-unquote hedging have no clue what they're doing, okay? You don't jump into a long euro, short euro at the same time and then close out the losing position and call that hedging. That's not hedging, that's gambling. Hedging is a very, very strategic thing. And back, in the olden days when it was only the broker-dealer brokerage style, right, where you would go to a broker and when you buy, he's selling to you, and you sell, he's buying from you, as opposed to now where you have ECN, everything's much more electronically matched. We used to see people come in all the time, long and short the same trade. 99% of the time, it's going to be net loss, okay? The way you want to scalp, or the way you want to hedge, and again, I don't want to get too off topic here, but the way I hedge is, let's say I'm in a position and I'm short Aussie dollar, okay? I'm short Aussie dollar on the longer term scope because I think that the broader trade is going to go down to 50, okay? But in the near term, there's a big support confluence here, and I want to take advantage of that rally. Sure, I can take a short-term position against my long-term view. And that way, on the way up, the losses that are taken on that short position are offset by the gain I made on this rally. That's a way that you can use to hedge. but then you close it out and you're still on the operative longer term position is open. Okay, maybe to offset some of the losses that you'll see on a larger position, but going long and short the same pair and kind of trying to gauge which one's going to be the loser, I've never seen that to work for any traders. Okay, and if it does work, it's pure luck. It's pure luck. So, okay, what I would say is for me, I would, again, I have a longer term view, or if I have a view that I'm in, I'll take maybe short term positions against that view. A lot of times you'll hear me say, we'll take a synthetic hedge. So, for example, if I'm short Euro key and it's coming to a big support target, maybe a Euro Aus position on the other side for a rebound. I'll take that. Might be a nice little move to offset some of those losses. What do you think about using commodities to hedge, i.e. gold? That's a different play. If you're talking about dollar CAD and crude, or not so much now, but back in the day when the Aussies used to track gold like tick for tick, yeah, there are ways that you can reduce your exposure on a larger trade by taking a position on a commodities pit. Sure, I see that. Eileen says, there goes Euro Aus. Oops. Yep, first 40 break below for the entire session essentially since the beginning of London. And this is Euro Aus. So remember, 53 is really the major play here. What I would want to do on a trade like that is this as well, guys, real quick, is a basic retracement. Initial target 53.80, and then the low. And that's just an 88.6 retracement. So square root of 786, guys, just another fib derivation, 88.6 retracement. Not a trigger I would definitely jump into at this point, just because your stop is right about 70 pips away if you're not already in this, guys. On a trade like this, again, your better position would have been to try to sell it towards the opening range high, since the opening range was so well defined. This does something, okay? It's very important. I'm going to take one step back, guys. I don't want to beat this topic up. I know we're running out of time here, but just want to say one thing. A lot of times we use these triggers just to validate bias, guys. It doesn't necessarily prompt a trade. So what this says right here, if this breaks 40 to the downside and we break the opening range for London, great. Now I should be looking to sell rallies. It just validates the bias. It doesn't necessarily mean this is the point at which I hit sell. So we have to really be mindful of near-term momentum when we're looking to get into these positions, and be mindful of where you are. I'm never going to really advocate selling at the session low or buying at the session high. But if it breaks the opening range high or opening range low, that validates the bias you should be looking for, i.e. now we're looking to sell rallies, or now we're looking to sell to buy dips. Does that make sense? Great convo here today, guys. I hope you found this helpful, going a little bit more into depth on triggers, on what's really prompting the position. Does yen performance have any correlation with oil? Kay says. I missed that question earlier. You could probably run a correlation report, but I think that you would see the correlation not so much on a direct yen-oil correlation, but broader risk. As oil has come off, you've seen that risk has sold off sharply. As risk sells off, typically that's yen positive. So I don't want to correlate oil and yen, more so broader risk, right? It's all the same trade. So it's something to keep in mind there. Okay, I hope that helps. Eileen says, makes sense, really helpful all around. Thanks for the others' questions. Tim says, great knowledge as always, top service out there. I appreciate that, Tim. Guys, we're going to go ahead and wrap things up here. We'll be back on later today. Mr. Jamie Setley at 1 p.m. will be here with his midweek strategy webinar, so definitely keep your calendar open for that. And we'll be back here, same time, same place, tomorrow morning, 8:30 Eastern, to wrap out the week. Remember, actually, I have to confer with Jamie, guys. I don't know if he's doing it today because of the FOMC release. He might push it till tomorrow. We'll tweet it out on SB Squawk as soon as I find out. I'm going to have a quick combo with him here momentarily. Best of luck trading. Watch that 2 p.m. clip. Again, the devil's in the details. I'll be tweeting out the release of the policy statement as soon as it's given out, guys. We'll give you our take on things. We'll see you tomorrow morning. Cheers.